Hello friends, welcome to today's technical analysis training video. In this video and in our next videos, we will start our training with the drawings first, and after understanding the subject fully, we will learn by practicing where to enter the transactions and from which areas we will take profit or close the transactions in the most effective way. In this way, our training videos will be much more understandable and more understandable. Since its application will be simple, I think it will appeal to everyone, from investors who are new to trading in the markets to more professional investors, so we can shape our goal of minimum risk and maximum gain in a simpler way, more profitable and more stable. And now let's start with our first example. As you can see in our first example, first there is a peak movement. Then, after another peak movement occurs, a higher peak movement occurs. Generally, in the three higher peaks formed after the first two equal peak movements, novice traders are buying again, thinking that the trend continues. They enter into the process. In such a case, professional traders want to check whether the trend will continue or reverse by taking a configuration in the direction of the price flow. We draw a resistance zone starting from the peak levels. Of course, the peak levels do not have to be formed in an extremely symmetrical manner as in the example here. They may be slightly different from each other, above or below, but when we draw the region, the peak levels should be very close to each other. Also, as you can see in this example, there is a very high peak level in the middle of the price flow. This peak level appears to be well above the resistance zone we have drawn. In such structures, when the price rises above the peak levels that occur close to each other, many traders enter the buy direction, but the market maker may trap the region in order to destroy the stop-loss orders previously written in the market book. In this case, they rush and trade the buy direction without knowing what the necessary conformance will be. Traders entering the market automatically close their transactions with a loss when the price returns to the stop-loss level. Let's see together how the price flow that I am trying to explain occurs with an example on the chart. At the end of a clearly formed rising trend, the price makes equal peaks and cannot clearly pass the previous peak, so we can understand that the strength of the rising trend has started to decrease. Now let's watch the price flow a little faster. I'm speeding up the parts a little bit in order not to take up too much time. As you can see, the price goes up again, goes down and creates an accumulation zone in a certain area. And let's make the region clearer by marking the upper and lower parts of this accumulation region. When we look at the price down again, we see that the price has broken the upper line of the accumulation zone and moved seriously upwards. It is at this point that traders who do not have the necessary experience immediately buy, thinking that they have missed the rising trend, but the movement here is a trap arranged by the market maker. They cannot predict that there will be a move and that they will take this risk. Of course, there is an absolute risk in every transaction. But the risk taken in this way is completely the result of inexperience. And here was the move that caused inexperienced traders to panic. The market maker pushed the price harshly back into the accumulation zone. Thus, the stop-loss orders of the traders trading on the parallel channel within the zone were activated and many transactions were liquidated. Thus, the market maker put the traders in a difficult situation by compulsorily closing the orders and open transactions in the region, and now the region became suitable for the market maker to make more profit. Happened. Let's draw the wave movements of the rising trend here. For traders who are still optimistic, a completely buying opinion may be formed, but traders who cannot fully understand the price flow and the intention and action of the market maker here cannot predict what will happen in the later stages of the price. As you can see, the price changed its direction extremely quickly and started to decline downwards. Here, many traders who think about the buying direction may have suffered great losses, but professional traders who can figure out the market maker's movement and wait to enter the transaction by taking the necessary configurations can start short positions when the accumulation zone breaks down. Professional traders are now following in the footsteps of the market maker and increasing their capital. In all these videos, we will learn to understand the plan of the market maker and to increase our capital with minimum risk and maximum profit without falling into the traps in the market. Please watch our training videos until the end and do not forget to subscribe to our channel and press the like button. Thank you, and continue the rest of the video. In order to understand better, let's analyze the same transaction and determine why the buying transaction would be wrong and how the selling transaction would be correct. Now, as you can see on the screen, the price had risen sharply above the accumulation zone. And as the price rose above the region, it created an unstable region, creating a formation we call the fair value gap, and a structure immediately formed above the larger region. Now, let's forget for a while that the price has turned downwards from this region and the buyers have entered the loss level. If the price were to continue its rise again after rising above the region, let's first see how we could enter into a buying transaction. If we had seen a formation in the form of a return formation within or slightly above the fair value gap in region, as I have drawn on the chart above the wide accumulation region, then it would have made sense to enter into the buy direction transaction. I even put a similar upward return formation within the fair value gap region. And if we had seen such a structure as I showed in the example, we could have entered into a buy direction transaction at the closing level of the last green candlestick and even placed our stop loss orders at two different lower levels. You can see these options on the screen. However, the fair value gap region is being violated downwards with the red volume candlestick we see on the screen. With the red candlestick, the possibility of trading in the buying direction is eliminated, and with the price rising above the region, investors who immediately enter the transaction become liquid. With this movement, buying in the region is eliminated. Processing direction is unthinkable. So, how do professional traders open correct transactions here? Now let's look at those examples and learn how we can make the most correct entry in such price actions. It is necessary to wait patiently after the immediate value gap at the top is violated and the price returns to the accumulation zone again. Then, as you see, the fair value gap zone breaks downwards. This time, you may have a question mark as to whether it could be a trap again when it breaks downwards, and this time it is processed. You may be hesitant to enter, but with the experience gained in the market, we will now learn that the market maker is dominant in the region and how we can follow the direction in which it will move. After price falls below the fair value gap region, it retreats towards the bottom of the region again and creates a trend continuation structure with the red candlestick I marked, which we call the engulfing archery formation. However, I would like to remind you that engulfing candlestick formations are always, it should not be considered as a trend continuation structure, and we must keep this in mind. And if we assume that when I enter the transaction with the closing of the red candlestick we marked, we will have achieved a significant decrease, we can think that we have made a serious profit here. Let's say we missed this drop. As you can see, as I have marked again, during this decline, the price created a fair value gap zone again. Now, this fair value gap zone can also be evaluated and the sales direction can be entered into the transaction again. Now let's see an example of this. After the fair value gap area is filled, there is a possibility that the price will go down again. Now let's try to determine the right area where we will enter into the transaction. After a while, the price tests the same level again and creates a reversal structure as you see on the screen, creating a selling opportunity once again. This gave us the opportunity to make sales for the second time. After giving an opportunity to make a short-term profit, the price corrects upward again, this time more harshly than before. Even though it is moving upwards, the first rule that should not be forgotten is that since we are below the large accumulation zone, we should never enter into a buying transaction and always pursue opportunities to sell. And here is a perfect engulfing candlestick formation again. You can enter a sell-oriented transaction once again by placing a stop-loss order right above the formation. As you can see, a possible transaction we will enter from here brings a very good profit. Will we give up on increasing our capital after this transaction? Of course no, we continue to constantly look for opportunities. And the price tested the lower level of the accumulation zone again, along with the candlestick called unstable doji. A clear bearish candlestick formed after this doji bar shows us the strength of the seller group here again. The transaction can be entered once again at the closing level of the red candlestick. This time, our sales transaction brought a much higher profit than previous transactions. Dear friends, remember that there is a risk factor in every transaction you enter. Don't be afraid to enter the trade with the right entry point and your risk-reward ratio properly aligned. It is very important to always keep your risk lower than your probability of return. In this video, I tried to show you a few transactions in which we can make profit in a row without falling into the trap of the market maker. I kindly ask you to subscribe and press the like button. This is great motivation for me. Thank you. See you in our next video. Goodbye.